Welcome to the deep dive. Today, we're really plunging into the latest from Bharti Airtel.
Yeah, their Q1 results for fiscal 26 just landed.
Exactly, covering everything up to June 30th, 2025. Just approved by the board. We've got the audited financials, the quarterly reports, press releases, the whole lot.
And our job really is to cut through all that density,
Yeah.
pull out the key insights for you.
Right.
We'll look at the trends, the big strategic moves, maybe some surprises, to get a real sense of where this telecom giant is actually heading.
Because it's easy to get lost in the numbers, isn't it? But there's so much going on. Strong growth in India, mobile money booming in Africa, AI stuff, new regulations.
Mhm.
So what's the real story these reports are telling us? Let's unpack it. Okay, starting top level, the consolidated view. Pretty impressive performance, wouldn't you say?
Definitely. Total revenues surged 18.2% year over year. We're talking nearly 495 billion rupees.
Wow.
And EBITDA, their operational profitability metric, that jumped even more, up 22.3%, hitting over 281 billion rupees.
Which pushed their margin up too, right?
Exactly. The EBITDA margin reached 56.9%. Very strong.
Okay.
And what's really significant is the bottom line impact. Net income before exceptional items, it basically doubled.
Doubled.
Yeah, up 97% year over year, almost 60 billion rupees. This quarter didn't have those exceptional hits we saw last year.
Right, that makes a huge difference. Shows the core business is really humming.
It absolutely does.
Uh-huh.
It really signals a much healthier underlying profit engine. Frees them up.
Now, here's something that jumped out at me. Capex, their spending on infrastructure and networks, it actually went down.
That's right, down 15% year over year to about 83 billion rupees.
But, and this is the weird part, they're operating free cash flow. So EBITDA minus that Capex that shot up dramatically, like
Yeah.
49%.
Nearly 200 billion rupees.
How does that work? Spend less, make way more free cash, it seems. Counterintuitive.
It does, but it's fascinating, isn't it? It suggests they're getting much more efficient with their capital.
Okay.
Maybe leveraging past investments better, optimizing what they have, perhaps shifting more towards software-defined stuff rather than just pure physical hardware.
So smarter spending, essentially.
Could be.
Mm-hmm.
And that surge in free cash flow gives them huge flexibility. Think debt reduction, acquisitions, expansion.
Right. And speaking of debt, how's the balance sheet looking?
Well, net debt nudged up slightly, about 2% year over year, but the key ratio, debt to equity, actually improved.
Oh, good.
Yeah, down to 0.80 times from 0.91 last quarter, so financially stronger overall.
Okay.
But there is one important flag. The auditors, Deloitte, included an emphasis of matter.
Uh-oh. What's that about?
It's about Indus Towers, their infrastructure arm, and a material uncertainty concerning one of its biggest customers.
Meaning?
Meaning there's a real question mark over whether that customer can keep paying its bills.
Mm-hmm.
Indus Towers getting that money back depends on that customer's staying afloat, basically, and Indus finding new tenants.
So a potential risk hanging over that part of the business.
Definitely something the group is watching closely. It's a notable risk.
Okay, good to know. So that's the big picture. Let's peel back the layers now. Where's the growth really coming from? Starting with India operations.
Right. The core. Mobile services first.
How are the subscriber numbers?
Looking solid. Total mobile customers in India hit almost 363 million. That's up 2.3% year over year. They added about 1.2 million net new customers this quarter alone.
Okay. And the money they make per customer, ARPU.
That's looking healthy too. ARPU saw a nice 18.8% jump year over year, reaching 250 rupees.
So they're getting more value out of each subscriber.
Exactly. Better monetization.
And people are using more data, I assume.
Oh, massively. Total gigabytes on the network were up over 21%, hitting 22,840 million GBs this quarter.
Just incredible numbers.
And the average per customer, 26.9 gigabytes a month now.
Wow.
Plus, their 4G, 5G customer base keeps growing now over 280 million.
And they're building the network to support that.
They have to be. Added 1,800 net towers, total near 340,000 now. Almost 1 million mobile broadband base stations, more fiber.
Mm-hmm.
The investment continues.
And profitability in mobile.
Very strong. Mobile services EBITDA margin was 59.4%.
Yeah.
Super efficient at scale.
Okay, let's switch to home services. Broadband, that's been a growth area,
A
right?
huge growth. Customers jumped almost 38% year over year to 11 million.
Wow.
And revenue's up 26% to over 17 billion rupees.
But the ARPU there.
Ah, interesting contrast. ARPU actually declined 6.1% to 537 rupees.
Declined, while customers surged.
Yes, and even more striking, Capex and home services more than doubled.
Doubled. Why spend so much if ARPU is falling?
It's a strategic play. They're aggressively partnering with local cable operators, LCOs, to push fiber into 1,427 cities that didn't have their direct fiber before.
Ah, so it's a land grab, basically. Get the footprint now, worry about ARPU later.
That seems to be the strategy. Sacrifice short-term ARPU for long-term scale and market share in new areas. Big investment.
Okay, that makes sense. Now compare that to digital TV services. What's happening there?
Not such a rosy picture. Revenue down 2% to about 7.6 billion rupees.
Customer base shrinking, too.
Yeah, down 4% to 15.7 million. And profitability took a big hit. EBITDA down 12%, EBIT plummeted 97%.
Ouch. 97% EBIT drop.
Yeah. And churn, the rate customers leave, ticked up slightly to 2.5% monthly. It's clearly a challenging market, likely shrinking as people move to other options.
Okay. What about Airtel business? I saw the revenue there was down year over year, about 7.7%.
That's right, down to about 50.5 billion rupees.
Yeah.
But it's not necessarily bad news.
Oh, how so?
It's strategic. Their stated goal is focusing on quality revenues, dropping the low-margin stuff.
Ah, so trimming the fat.
Exactly. And look at the profitability. Despite lower revenue, EBITDA was up 8.5%. EBIT up 7.5%.
So the strategy is working, higher margins on less revenue?
Precisely. And they're getting traction in high-value areas. Postpaid IoT and M2M connections machine-to-machine jumped over 36%. That's things like smart meters, vehicle tracking, good long-term business.
Got it. And finally, for India, passive infrastructure Indus Towers. Revenue is up.
Yes, up 9% to over 80 billion rupees.
But, I sense a but.
Well, despite the revenue growth, EBITDA actually decreased by 3%, and margins fell quite a bit, from 62.3% last year down to 55.4%.
And that connects back to the auditor's note, the uncertain customer.
Exactly. That uncertainty is likely weighing on the financials there, impacting receivables, even though they're still expanding the physical infrastructure, added over 5,700 co-locations this quarter.
Bringing the total over 411,000.
Right. So expansion continues, but that customer risk is a key factor to watch.
Okay. A complex picture in India with definite strengths, but also some clear challenges and risks. Now, let's shift continents. Africa. You mentioned this seems to be where the really exciting growth is happening.
Absolutely. Africa's performance is really robust. Customer base grew 9% year over year, now over 169 million.
And revenues?
In constant currency, surged nearly 25%. That's 1.4 billion US dollars. A very dynamic operation.
What's driving that? Is it just more subscribers or something else?
A lot of it is the mobile money platform. It's just phenomenal.
Really? How so?
Active mobile money customers up 16% to almost 46 million. Transaction value jumped 34.5%. They processed $40 billion in transactions this quarter.
40 billion. Wow.
And the revenue from mobile money grew over 30% in constant currency. It's a huge engine.
So financial inclusion really taking off.
Definitely. And data usage is booming too. Total GBs up nearly 50%.
Yeah.
Usage per customer climbed 26.5% to 7.8 gigs per month. Still lower than India, but growing fast.
Any big strategic moves happening in Africa?
Yes, quite a few significant ones. Big news is the agreement with SpaceX.
Starlink.
Exactly. Bringing Starlink's high-speed satellite internet to Africa. They've already got licenses in 9 of their 14 countries.
That could be a game changer for connectivity, especially rural areas.
Potentially, yes. Also, they're upgrading the SIM registration database system in Nigeria for better security and compliance.
Important regulatory stuff.
And some leadership changes. New CFO, Kamal Dua, new independent director Cynthia Gordon, and Akhil Gupta retired. Plus, they're doing a second share buyback.
Returning cash to shareholders up to $100 million.
That's the plan. Shows confidence.
Okay. Lots going on. How do the profit margins in Africa compare to India EBITDA margin?
Africa's margin was 48.1% this quarter.
Which is lower than India's nearly 60%.
Correct. India's operations are currently more profitable at that EBITDA level. But Africa's growth trajectory, especially with mobile money scaling up, means those margins could improve significantly over time.
Right. Makes sense. Okay, beyond the core operations, what about innovation and the regulatory landscape? These can be hidden drivers, right?
Absolutely crucial. Airtel's pushing hard on digital innovation, especially using AI.
Like what?
They've enhanced their AI spam detection tool. It now gives alerts in 9 Indian languages, plus flags international spam calls. Apparently, overseas spam jumped 12%, so it's timely.
That's useful.
And for businesses, they launched Business Name Display BND. Helps legit calls stand out from spam, builds trust.
Smart. In this environment, trust is key. Is that tech unique, though? Does it give them a real edge?
Well, others have filters, but the multi-language AI approach, real-time blocking across all sorts of platforms, email, web, SMS, apps that feels like a step beyond basic filtering. They're also rolling out an AI fraud detection solution.
Oh, yeah. What does that do?
Blocks malicious websites in real time. Works across email, browsers, SMS, OTT apps. It's free for their customers, already live in Haryana, and they plan a national rollout.
That sounds like a really valuable feature for customers, building that digital safety net.
Exactly. It enhances the value proposition significantly. Now, on the regulatory side in India, lots happening.
Always is in telecom.
Right. The DOT is now allowing 5G in building solutions at airports.
Yeah.
Using the C-band spectrum.
Okay, better airport connectivity.
TRAI, the regulator, put out recommendations on critical IoT services, defining them, figuring out M2M SIM ownership transfers, and also on spectrum for satellite communications.
So setting rules for new tech areas.
Yeah, though remember, TRAI recommendations aren't binding on the government. We'll see what actually gets implemented.
Got it. Anything else?
Yes, the Reserve Bank of India, the RBI, issued new digital lending directions. Tighter rules for lending apps requires reporting to the RBI, compliance checks. That impacts Airtel's own fintech ambitions.
Right. Affects their payment bank and lending partners.
Definitely. And one more. The Telecommunication Tariff Order 2025. It mandates specific broadband plans for public Wi-Fi hotspots under the PM WANI scheme, basically capping the price for those plans.
So quite a mix of regulatory changes enabling some things like 5G indoors, defining rules for IoT and satellite, tightening lending, and mandating certain tariffs.
It's a constantly evolving landscape. Adds complexity, but also opens new avenues. They need to be nimble.
Okay, so bringing it all together, after this deep dive into Q1, what's the main takeaway for you, the listener?
Well, I think it shows Bharti Airtel is in a really strong position overall.
Yeah, performance looks robust.
Driven by that solid growth in India, mobile and home services, plus the really impressive expansion in Africa, especially mobile money and data.
Right.
But what's really interesting are the strategic shifts. That focus on quality revenue in the business segment, even if top line dips slightly, the big targeted spending on home fiber expansion.
Investing for the long term there.
Exactly. And the aggressive use of AI for customer experience and safety. It shows a company looking ahead, even with challenges like digital TV decline and that Indus Towers customer issue.
So navigating challenges while investing smartly in growth and technology.
And doing it all within a really dynamic regulatory environment.
So hopefully you now have a much clearer, more nuanced picture of Bharti Airtel's current state and direction.
Yeah, beyond just the headline numbers.
And as you think about all this, here's a final thought to consider. How might this deeper integration of AI in customer service, fraud detection, combined with these big strategic infrastructure moves, like partnering with Starlink in Africa, actually reshape the entire competitive landscape for global telcos? Not just financially, but in terms of customer value and market position. Something to mull over.